Let me just say good afternoon, everyone. Thank you for attending this personal finance event called Budgeting in Bitcoin. I just want to let you all know that this event will be recorded, but since we are using Zoom webinar, attendees won't appear on the camera, only the panelists. We have a great panel for you all today, and I'd like to thank NFSC alumni and founder of the Inside Circle, Scott Manthorn, for connecting us with these experts, executives, and professionals that are going to be talking to us about a wide range of personal finance topics. Before we get underway and I introduce our moderator, I would also like to thank the James Madison Institute for providing us with a $25 gift card to Born and Bred to give away to a lucky attendee. Stay tuned at the end to see how you can win this giveaway. Now, without further ado, I'll introduce our moderator for this event, who is one of FSC's very own talented professors, Dr. Falcon. Currently, Dr. Falcon is an assistant professor of business and healthcare administration at Florida Southern College. In the Barney Burnett School of Business and Free Enterprise, where she teaches a variety of courses that include anything from introduction to business, principles of management, and personal finance. In 2019, Dr. Falcon was awarded the Outstanding Faculty of the Year and the Sam Walton Fellow of the Year for excellence in the advancement of the entrepreneurial spirit. In 2020, Dr. Falcon was appointed to the prestigious position of the Dorothy C. Tanner Chair in Ethics in Business and Economics. Dr. Falcon is also a small business owner managing her own real estate investment corporation. As a state certified building contractor, she also manages and leads her own residential and commercial building and remodeling corporation. Dr. Falcon, I'll go ahead and leave the rest to you.
Thank you very much. I appreciate that introduction, Garrett. And thank you everybody for being here. I really look forward to seeing some of your questions or comments on the chat. And also I'd like to thank our panelists, and I'll start by introducing Marcus Ogden. In 2003, he was drafted. Marcus, if you want to say hello, everybody.
Hello, how's everybody doing?
I never thought that I would be introducing an NFL offensive lineman, but here I am. I guess just leave it to life to give us all these kinds of wonderful opportunities. But he was an NFL offensive lineman, and he played for the league for about 5 years. Then he decided to retire and get into something near and dear to my heart, construction and contracting. And at the age of 27, he started his own company called Caden Premier Enterprises. And unfortunately, and despite all of the efforts in growth, his business went bankrupt and lost about that just hurts me to say it, $2 million in about a 90-day time frame. It's got to be enormously painful. During his darkest hours, Marcus pulled himself together, got a part-time job as a custodian. With hard work and determination, he became an inspirational keynote speaker, an executive coach, and a 2-time best-selling author. So welcome, Marcus.
Thank you, Dr. Falcon.
And Lavon, I left, is an Olympic track and field athlete. She's now a lawyer who runs a consortium of vertically integrated real estate and banking companies. She graduated with a bachelor's in finance from Hampton University, a master's in business administration from Nova Southeastern University, and received her law degree from Florida A&M University. She's a serial entrepreneur, and she is dynamic, people and capital at bringing people and capital together, has a keen ability to analyze complex problems, and is a pragmatic leader of very strong groups. So thank you, Lavon, for being here.
Thank you for having me.
And then lastly, we have Stephen Mead, who is currently the founder and chairman of Moneta Pro. It's a finance tech blockchain company for global companies to participate in corporate trade. He's turned out to be #1 in about 32 companies in the Silicon Valley Global ICO contest, and which happens to be the largest ICO competition in the world. So his company finished first. At the age of 22, he went to work for Travelers Group and rose to regional vice president at the age of 24. During his time there, He trained over 8,000 salespeople in the area of financial services. Stephen has played a significant role in creating, incubating, and architecting 9 different companies, spanning from furthering the development of the internet, e-commerce, payment processing, and blockchain technology. As someone who's been a CEO and a founder of several companies, Stephen is passionate about creating companies that make a difference in the world. Welcome to all 3, Stephen, and all of our panelists today.
Thank you. The background makes me sound really old.
My background? Oh, your background. Okay, well, yeah, I guess you caught on the fact that I'm 90 years old. Anyway, well, welcome all. I appreciate you. I'd like to start by asking some questions about budgeting, if that's okay. I know some students ask the question, well, why is budgeting so important? Why do people talk about budgeting all the time? And as a college student, how do I do that? Is it important for me to begin now? So Marcus, would you like to take that on?
Yes, Dr. Falcon, thank you very much. So as a young college student, it's very important to start budgeting as quickly as possible to start getting into a routine. So for me, when I was in college, I went to Howard University, I budgeted things I had. I knew what was coming in from my athletic scholarship money. I knew what I had to spend as far as my food, my little things like that. It was very small, but I started that when I got to the National Football League. I was 22 years old. I was making about $13,000 to $15,000 a week after tax. So for me, I actually wrote down before they had the apps like Mint, things like that, money coming in, what was going out, my rent, my utilities, my water, my car, my insurance. I did an article in CNN Money probably about 3 or 4 years ago, and I still have a picture of that budget when I was 22 to help me stay on track. So I learned that in college. It made me accountable to what I knew I was spending. So I knew I wanted to always have money left over, and I could put that money into saving, the 401k. So as I grew older in life, I'm 40 today, I wouldn't be having the issues of not knowing how to budget and or save my money, because I started at a very young age in college doing just that through a budget and allocating income to expenses.
How much do you think a college student should allocate to savings?
I like to tell people you should probably look to save between 10 to 20% of what you have coming in. That's a good number, because if you go any much higher than that, I feel sometimes as young college students, you might be asking them too much, because we all like to do things and spend when we're young. But if you start getting in the habit of putting away 10 to 20% of your income into some type of an account, saving, some type of investment, some type of vehicle where it can grow for you, when you get out of college, you have a little bit of a nest egg going, and you can at least get your life started out and hopefully not be in debt. And I think that's what I want people to strive for, getting out of college and having as much cash as you can, keeping your debt down to a minimum.
Absolutely, that's great advice. I often tell the students to just skip a latte. What is it, a latte and a half? $10 a month will make it $100 of savings at least at the end of the year, or $120. So it's very important for them to think in smaller increments because you're not making a lot of money. Stephen.
Yeah, I took I think a different tact than Marquise. When I was 19, I actually created a book called How to Budget and Finance Your Money. So I had an infomercial with how to apply for credit, how to improve your credit, and how to budget and finance your money. That was when I was 19 or 20, and I started laying it out. But I love what Marquise said. I'm a little inverted. What I used to do that helped, especially with students, is pick a dollar amount, the 10, the 20. I would show them, I'd say, look, if you just did $50 a month, I would teach what's called dollar cost averaging, that no matter if the market goes up or there's rule of 72, like there's some simple principles. $50 a month over time gets you X. And by putting a specific dollar amount to an outcome, they're like, wow, 50 a month turns into $2.5 million. Yeah, $100 doubles that to So I like picking a specific dollar amount and then showing them what that's worth over time, and also teaching, dollar cost averaging. When the market drops, you're just buying more and staying long term. Don't get caught up. Like, everybody gets emotional, and you have to learn how to take emotion out.
Absolutely. Numbers do not equal emotion, although numbers can make us feel emotions. But you should remove that emotion from, especially your savings and your financial decisions. Well, moving a little bit away from budgeting, what would you say, Marcus, in terms of credit cards? That's another big question from students who've not yet turned 21 yet.
So credit cards are something that I feel a lot of people get a false inclination for. They feel that they need to have them to build credit. That's not true. You already have a credit score going from a certain age, and you don't need to have a credit card to try to work on establishing credit. And the problem is, something that I used to do was totally wrong. I used to look at credit cards as an asset. And I'm like, wow, I have all this money over here. I can borrow. I can go and do this. But then when I borrow it, I got to pay that back plus interest. So I then quickly realized that it's not an asset, it's a liability. It's a debt. So a lot of times young people say, well, I've got this credit card. I can spend this. I can do this. I can have this. The thing is, you end up buying a lot of things that you are really what I call non-valued assets. Clothes, shoes. I mean, I have a 17-year-old, and I swear she had a credit card. She would max it out, was going to shop at like Starbucks or going to shop for food. Like, that's what she loves to do. So she has a debit card that now is linked to her checking account because she has a job and she works. But we're not going to let her get a credit card. We don't want to teach her that habit of buy, and then have to pay something back over time with interest. So I didn't get a first credit card until I got to the NFL, and I was able to pay it off if necessary, but I didn't really like to use credit. I'm still, to this day, I'm not a big credit card person to this day. I have them, I'll use them sparingly to build my credit because I'm in that age range, but I don't use it to like as a safety like I used to. When I was in business, I made some really bad mistakes. So I wanted you to understand using a credit card is something that's not necessary to establish credit, and you want to make sure you don't get in the habit of buying and spending, and then you see at the end of the month a huge bill that you have to pay, and you don't have money to pay it, and then next thing you know, it'll start to hurt your credit in a negative, impactful way.
Absolutely. Anybody else want to jump in on this credit card issue?
I'll go quick, Levon. Then, like, mine's easy. I tell parents, give your kid a prepaid card. Put $200 on it. If they want to spend more than that, tell them to go get a job. Like, give them a limit. Say, here, budget, here's your card. Here's how much it has on it. It's not an unlimited bank account. If you want more, go get a job.
Very interesting. So prepaid cards are those that are not using somebody else's money. They're actually using money that you put in, right?
It's not a prepaid card, still counts as your credit score, right, but it's a limit. If you put $250 on it, that's it. When they've gone over it for whatever, I tell parents, disassociate from the kid's decision. They have to learn how to make better decisions. Give them a limit. If they go over, they need to get a job. Absolutely.
All right, Levon.
So I use a similar approach. I've never really been into credit cards. I was getting a lot of credit card pre-approvals when I was in college because my parents had me on their accounts as authorized signers. So I had a good credit score going to college, which is dangerous. But so I got a credit card when I got there, and I was on scholarship. So I didn't have real bills. I lived on campus. I had a meal plan and all that kind of stuff, but I had a car and car insurance, and I had to get gas and groceries. And so my parents said, use your credit card to pay for those expenses. And then you have that money in your account, pay it off before the cycle bills so that you won't have to pay interest. And you'll still be able to, I'm like a point hoarder at this point. So I've always been, use it so that you can get the points, but make sure that you know the cycle date, that you pay it off before that. And it teaches you a lot about learning how to discipline yourself, because when you become a free adult and these are all your free decisions to make, you've now exercised the muscle of learning to be disciplined with how you spend.
Unequipped, absolutely. Great advice, Levon. I think one of the things that I've learned in teaching personal finance is that there's an urban legend out there that is actually driven by some parents, some adults teaching their younger student or their younger child that says basically go get as many credit cards as you can because that's what's going to improve your credit score. What would you say to that?
So what I would say to that is don't fall into that temptation, especially because they're going to say, we're going to save you 10% today if you open this card and all of that stuff. It sounds great. However, what you end up is with a bunch of open accounts that are the same type. That doesn't actually help your credit score. And it also will be a temptation to make you go and spend money in those stores just to use it. And it's just not a good idea. Not to mention, most of those cards have expenses, which is like an annual fee or much higher interest rates than your typical card. So I say avoid all temptation. When they ask you, say no, thank you. They get great bonuses for asking you. So, just say no, thank you.
Thank you.
Credit scoring is actually the inverse of what you think. More isn't better. Usage is better. So if you have one card, the way the credit score works is if you have a card that had a $5,000 limit, but at some point had a $3,000 or $4,000 balance and has been paid down, the banks look at that as more responsible than having 5 cards that are open that you've never used. They want to see you can responsibly use the limits of a card. So one card that you've utilized and paid off or paid down and kept, your payments active and on time impacts your score more positively than multiple cards.
Absolutely. Great point. Marcus?
No, I agree with that. I think it's very important. And the one thing that Levon said I agree with, and Stephen also, is that you just have to be very responsible. And a lot of times what happens is you have a credit card and you have that hidden fee. And then you have to say, like, you have this card, and it's like a $25 limit. You have like a $7 bill for your monthly fee, and you don't keep up with it, and you don't pay that. So you try to use the card, you can't use it. I actually had that happen to me one time when I was in the NFL. I had a card I didn't use. I was like, okay, whatever. And I went to buy something, and it said, nope, decline. I'm like, what? I haven't used it. And I called the credit card company. Oh, Marcus, you didn't pay your $25 monthly fee. I'm like, what are you talking about? I didn't know you had a monthly fee. So I canceled the card, made the payment. I said, I've learned now. So I mean, what I do for myself is every month I check cards to see if there's any like fees or anything that's processed, and I pay it online and I keep it moving. This way I'm always on top of the credit and any type of hidden fees, monthly fees. Some cards, like Levon said, do annual, some cards do monthly, but I like to get into a consistent, disciplined habit of checking my credit stuff beginning of every month, just to make sure if something came up or if that fee, it gets paid automatically online, and it helps me to continue to build the credit.
Very good. Excellent advice. What would you say to someone who ends up not having enough money? Say they had to buy all 4 tires of their car and they just don't have enough money. That was not a planned expense. They don't have enough money to pay it off at the end of the month. What would you say to someone to make sure they continue to protect their credit score? And then ultimately, why is this credit score that we keep talking about so important?
Go ahead, Stephen.
Well, words matter. And you said something interesting. I'm pedantic about wording. You said pay it off. The premise of credit cards is you want to pay it off, but if you can't, you have a minimum payment. But even if you can't make your minimum payment, call the credit card company. They don't want you to be late. So you're better off to call and say, hey, here's my situation. They'll extend it, they'll lower it. Just don't ignore it. That's the biggest thing, is just don't ignore it. Be proactive in your finances. Call the company, explain it. They'll work with you. Marcus, go ahead.
No, I agree with you. I think it's important that you just are upfront. You're upfront. You're transparent. You let them know what's going on. So this way, it doesn't seem like they don't feel you're trying to ignore them and not make a payment. And what's important about credit, Dr. Falcon, If you're trying to go out and buy a car later on as you leave school, or buy a house or a home, the credit score you have, the better the credit score, the better they're going to give you on an interest rate, because they see you're responsible in paying your bills in a timely fashion. So like for me, I've been working on, continue to make my credit score good and improve, because I want to be able to get the house that I want at a better interest rate. If your credit is not good, they're going to charge you a lot more interest to borrow money, because your payment history is not very good, or it's spotty. And that's going to cost you a lot more money to borrow on things you want to get. And again, it's all about keeping yourself in a good position where people see if you borrow money, you know how to pay it back in a timely fashion, like Stephen and Levon have been saying the whole time.
It's all about that muscle, right? That Levon was talking about. It's all about exercising that muscle of discipline when it comes to credit card payment. And, a lot of people don't understand about, they think that only one payment a month is sufficient for a credit card, especially if you have an amount there that you've not been able to pay it off. You can pay every month, you can pay every day down that balance to make sure, because the balance is what drives the amount of interest that you pay. So if you can pay every week, if you're going to pay $400 anyway a month, at the end of the month, why do that if you can pay $100 a week and lower that amount that you owe, so that at the end of the month, it's multiplied times the interest rate, so you pay less interest. So go ahead. Yes, Stephen.
So real quick, two things. One, there's all kinds of tools that exist now that didn't exist when I was growing up. They're the edge of Marcus. Well, Levon's been in the world probably forever. Credit Karma, mint.com. Like Credit Karma is great. Sign up for free. It gives you a free credit score. You can set notifications when your bills are due, but they're also looking at your spending patterns and offering you different credit cards, different solutions. You can get control of your finances very easy. But one technique we taught in the book, it's called a waterfall, and it's a reverse. If you're making extra payments, the tendency is to make the highest payment and credit card balance first. And that's a mistake. Pay the lowest one. And when that's paid off, take all of that money and roll it up. Eliminate the lowest ones first back to a zero balance and keep rolling money from the bottom up. Don't go top down, because you don't make enough progress on the way interest is structured.
Very good. Levon?
I lost my thought. Oh my God. Because that was a very good point. Oh my goodness. So we're talking about paying off things, right?
Yes.
Okay. So
Paying off credit cards and how to maneuver if you don't have all the money to pay it off at the end of the month.
yes. So the advice about telling people to being transparent with your lender, best advice ever. They're usually willing to work with you, push it back, change the date that it's owed, everything like that. I remember what I was going to say now. My favorite app of the moment is called Truebill. And it's been saving my life, because what it does is it tells you when you have recurring things, which means you've signed up for something. I sign up for stuff all the time that has these free amounts of time, and then it starts to charge you and I forget to cancel them. So then you get there and it tells you every month you have 7 bills coming up this week, and you can look at them and say, wait a minute, I don't use that, and it will cancel it for you.
Yeah,
So
very good.
Really good app for that. And it also allows you to create a budget. And so one of the things that always worked for me in terms of budgeting through college and even now is I use the set it and forget it method. So in my checking account, I get everything direct deposited. So I have an automatic date where it moves money to a savings account and it moves money to a fund account.
Right.
I don't really believe in, a lot of want spending. So I'm more of a reward person. So I do really well for the whole month. I'm like, yes, you're going to go out and have a great dinner. And so what we tend to do, especially in college, is like you board spend. So you're going to go to the corner store, you're going to go and get a random slice of pizza. And so instead of doing that, you like save, be as lean as you possibly can, and then do your reward dinner, do your go out and top golf, whatever the case may be. And you'll end up saving way more money over time.
Absolutely. It cannot just be famine all the time. You got to reward yourself a little bit. I know Marcus is going to have to leave us, and I feel terrible because you've provided a lot of wisdom. Is there one or two things that you'd like to leave this audience with as you leave us for your next meeting?
So I would say the two things I want to leave them with, number one, is just be very cognizant and develop a routine for yourself. If you want to have success, I don't care if it's about watching your spending, Bitcoin, it doesn't matter. You have to develop discipline, like LaVon said. She was an Olympic athlete. I was a football player. Steven's been around credit and business his whole life. So be disciplined. The three of us have discipline in all that we do. When you develop discipline and routines, it becomes your habit, which becomes your life. And the second thing, the wisdom that these people have been sharing with you, I took notes on it myself. You know, talk about how you have a credit card, pay the lowest one, roll it up. My bill. Never stop learning. The minute I stopped learning in my construction business, 6 months later, I filed a Chapter 7 bankruptcy. My home was foreclosed on, lost both my cars in the same day. I was a millionaire in 2012. I had $400 to my name in 2013, April, and I was a week away from being homeless. After a degree in finance and budgeting and all that, one bad mistake can take you out in business if you stop learning. So never stop learning and always be willing to be humble and listen. And again, create discipline and a routine for yourself, and you will have a successful life no matter what you do. That's it. Thank you so much, Dr.
Wow,
Falcon.
that was great. Thank you so much. Thank you for being here today.
Absolutely.
Nice
Have a great day, everybody.
Bye-bye. Well, gosh, that was incredible. That was wonderful. Now I get to say that I had a conversation with an NFL lineman. That's just incredible. And for our audience too, that's just gotta be incredible for all of us, incredible experience. I'd like to talk as we get into 30 minutes into our time together. I'd like to also bring to our attention this Bitcoin phenomenon. I guess my question to you, I get a lot of students ask me if I want to start investing, Dr. Falcon, if I have a little bit of money, is there an opportunity for me to get into Bitcoin? And if so, how does that work? What does it mean? And I think there's a lot of lure. I was looking just at last year's Bitcoin yields, and it's over 400, and I think I wrote it, 469% increase. It used to be March last year, today was 3,898. Today, right now, started in the morning at 7 at 52,000. So the gain is incredible. The lure is incredible for investors. Can you speak a little bit more about that?
I can. What's the question directly?
Yeah. So my question is, should they invest? Should they buy pieces of Bitcoin? Is this where, you know?
It's an easy answer. Yes.
Okay.
You can buy. So I have a podcast out there. I put it in. One of my shortcasts was, don't look at the price, look at the percentage. So what you said, Dr. Falcon, was exactly right. Bitcoin's at 50,000. People are like, I can't afford it. Think of Bitcoin, a brick of gold is $600,000, and you can't afford a brick of gold, but you can buy a $50 gold coin, and that gold coin goes up and down at the same percentage. So if all you could afford is $50, you still earn 400% on that asset. So Bitcoin, you can buy any amount. If you can buy 10 or 15 or 25 or $50 for a kid or in college, buy a little bit every month is number one. Number two, don't ever sell it. Ever. Even when the market drops, even when it looks bad, don't get emotional. Don't ever sell it, because this will be my last point. Bitcoin has created fascinating, finally, we've been fighting for 3 years, loan programs. We used to have to sell our Bitcoin every month to pay the overhead on our company. Now we put Bitcoin in an app called Celsius, and I take a loan against the Bitcoin as the asset. So for a kid, if you're saving money, you could end up borrowing against your asset to buy a car or to buy a house. Saving money in a bank to buy a house will never work. Saving money in an asset you can eventually borrow against. Bitcoin, in my opinion, will revolutionize financing for 99% of the world that's never had access to it. And for kids in college to understand it, invest consistently, and learn how to leverage it properly in the future, it'll be a game changer.
Absolutely. And so you spoke about buying pieces of it. Like, what would you recommend? Like, how would someone who maybe's got $50 right now, and if you are interested in investing, what are the mechanisms out there?
It's the same thing. There's a ton of apps. Abra, my friend Bill runs Abra, is a great one. Voyager, the guys at Voyager, Coinbase, there's Gemini, which is the Winklevoss twins. There's a bunch of ways to do it. But the point is, Dr. Falcon, if all you have is $50, that $50 means as much to you as the guy who only has $500,000. But that $50 is going to go up at the same percentage as the guy at 500,000. So
And that's where the key is.
that's the key, is the percentage return as an asset has just been phenomenal. And I believe it's only going to go up for a bunch of reasons.
Mhm.
And to me, it's a less risky investment than stocks or things like that you can't buy a lot of stocks for $50.
Right. Well, I think that's important that you say that. And Lavon, you had something to say about that?
Yes. So that was great advice, especially wish that I had it like 3 months ago. So I've been buying Bitcoin for a bunch of years. And so I had a very low cost basis, and I saw it jump up, and I'm like, I'm getting out of here. I don't know what's going on. I don't know why. So I sold it. And but one of the things that I wanted to mention was definitely don't sell it, because it's going up, and you can borrow against it. So it's really, you'd be upset if you were the guys who spent 10,000 Bitcoin on pizza in 2010. And then also that Robinhood Bitcoin is not Bitcoin. It is a stock version of Bitcoin. So it's not transferable. So just because I know a lot of people use Robinhood, and
I was just going to ask you that, because I do have Robinhood, and a lot of people think that it is Bitcoin.
Exactly.
But it's not.
It's not transferable. And so you want to use the actual trading platforms that allow it. A lot of people like Coinbase because that's like the most advertised ones, but there are plenty. I am definitely not a person who would get on stage and tell people to just invest in things that they don't understand. So make sure you go out and find out more about it. But digitizing and keeping things transparent is the way of the future. So it's definitely something to look in, and definitely to drip a little bit of money in while you are having way less responsibilities than the rest of us.
Yeah.
Well, yes, and I think you took us to a great point, and I think if one of you want to take on this whole idea of investment versus savings, should we save first and then invest, or should we do a little bit of both? What would your take on that be? So again, if I only have $50, what would you like? How would you maneuver that?
I would answer it, but I'm much more risk averse. So the information I'm going to give isn't proper for everybody, because you have to be disciplined.
Right.
I'm kind of a proponent. I have cash saved now, but when I was younger, my emergency fund was my credit card that was at zero with a $10,000 balance. Rather, I don't want $10,000 sitting in a bank account trying to save to get there, because that money in a bank account does nothing for me. If I know I have a card as my emergency reserve, then I can be disciplined in taking an amount of money and investing. And If all you have is $50, Bitcoin may or may not be right, but you start with something that's there. When you start looking at options, bank, savings account, bonds, stocks, mutual funds, penny stocks, big stock, like there's an arc of what $50 will get you. And then you have to decide what your risk profile is. For young kids in college, your risk profile should be long. You should be
You
more
mind
willing to
explaining
take
a
that
little bit more,
volatility.
Stephen, what a risk averse versus non-risk averse?
Well, everybody should look up and learn what dollar cost averaging is. If you buy stock at $100 and you're putting in $50 a month, and if your stock goes from $100 to $200, most people think that's good over a couple of months. If that stock was at 100 and it dropped to 50, people panic and sell. But if you say, oh, long term, you keep putting money in, when it drops, you buy more stock at $50. When it goes up, you have more. So that discipline of saying long term, I know things are going to fluctuate. The only way you lose money in the stock market or investing is two ways, and it's really simple. One, you sell when the market's down. You don't lose money when the market's down. You only lose if you sell when it's people call me all the time, Robinhood, we had to do a whole thing on that. They're like, oh, the market's down, I've lost money. No, you didn't lose. You only lose if you sell. If you stick in, it usually comes back up. The only other way you lose money is if you're in one asset. If you buy one stock and that company goes out of business. So learning how to diversify and things I think are important. But I'll make two more and then I'll throw it back to Levon. I get asked a lot, oh, do you wish, you wish you would have bought Bitcoin earlier? Do you not regret buying Bitcoin earlier? And I have a very simple answer. And another article just came out on me. I don't regret not buying it earlier. I bought Bitcoin in 2012 when it was at $3. And I bought 1,000 of them at $3, 1,000 Bitcoin. I don't regret buying it early. I regret selling it at $5 because I didn't understand it. So understanding what you're doing as an investment. And then the second one is we had our dollars. We had big money come in at Bitcoin 9,000 and it dropped to 3,000 and we had to make decisions. Do we sell it? Do we convert it? And we stuck in it long and now it's up so much. So that long-term horizon of discipline is really important.
And investing, absolutely, right? Investing is not for short-term, investment is for long-term.
And that's, again, if you learn dollar cost averaging, you'll have a better feeling when the markets drop. You'll actually be excited about your decisions, not emotional about them.
Exactly. And here comes the emotion, does not mix well with money. Levon.
Exactly. I am definitely a proponent of dollar cost averaging. The only people who should be trading on a normal basis are people who spend a lot of time watching the news and following what's going on. Other than that, you're going to, even professional traders lose money. So it's just not a winning formula for someone who's risk averse, for sure. And in terms of I wouldn't say if you have $50, what to do with it. I would say, let's figure out some ways to make another $50 and I'm more of a focus on earning and then being able to spread it a little more than spending a lot of time trying to figure out where to place it. I want you to set it somewhere, forget about it, and think about ways to earn more money. In this day and age, you can literally make money doing anything. You have all of these extra things, put it on Poshmark, sell it. Yeah. Walk and give Uber Eats. All of those ways to use your free time. And, it's a great way to just build your confidence in your ability to earn, but also it will make you less tight on the $50 too. You're like, okay, I can get $50 in Bitcoin because I'm going to go out and
make another 50.
Yeah. Right.
I had to learn that early. Something Levon said is interesting. Again, because I taught financial services and sales training, I had to learn the discipline. But I sold a company years ago. In 99, the company I sold went on to become PayPal. and I took a percentage of the sale, the exit, put it into mutual funds. And again, if you don't know what mutual funds are, they're another great type of investment, diversified. I did what's called load balancing. So I picked international markets and technology that are high risk, a certain percentage in each. Every year, they balance it back so the same percentages are there. I haven't looked at that. I purposely turned my statements off. I haven't looked at that account in 22 years. I have no idea how much is in there. I don't, because if I looked at it, I'd want to spend it or I'd get so I have an account I haven't looked at in 22 years. I don't get the statements. Every time they come in, my annual report gets filed away. I haven't opened the envelopes. But
That's really great advice.
Discipline to say this is a long-term hold because I'm going to risk all the others. And, you know, the risk company entrepreneurial side may not work. But when you get disciplined and you can do something long-term, you have to divorce yourself from the swings of the market.
Right. Otherwise, you go down with it.
Mhm.
Or you
Yeah,
for
or
it.
I'll risk it. I'll
Or-
risk it on another new company that is going to work, and some work, but they don't all work. Markets drop, Bitcoin goes down, presidents are elected, wars, like you don't know what's going to happen. COVID, like there's always something you can't prepare for. So having discipline for something that you know is just long term, do it every month and don't be emotional about it, and you can make a difference.
Very good. Well, I think one of the things that I did want to talk about before we start fielding some Q&As from our audience is this whole idea about investing in yourself. And Lavon kind of alluded to it a little bit. It's not just about earning more money. There's a point in which you cap out in terms of how much you can earn based on your qualifications or based on what you know, right? So how did you continue to, what would you say to someone in terms of maybe even getting more certifications, going into graduate school? Is that something you would advise? How would you get people to earn more money?
I am a strong believer in being a lifetime learner. Every single thing that I thought that I knew or was a master of when it was going on, so mind you, I was in college almost 20 years ago, it's still relevant, but it's not as fresh. And so just being a student, there's so much information on the internet now that wasn't available. So you can take that course at Harvard that teaches you about dollar cost averaging. So you're literally sitting in the most information ever, but it's really easy to become overwhelmed because it's a lot of information. So I'm a strong believer in like taking a course, going to a continuing education class, certification programs, that sort of thing. So it gives you like targeted, focused information on specific subjects that you're really interested in. And it helps you build, because one of the things that I talk to people about all the time is the big bucks are in the niches. The more deeply you know something specific, you will become the go-to for most people who are generalists.
Very good. Excellent advice. Stephen.
Again, Dr. Falcon, you said it early on. When I was 22, I read 357 books in 6.5 years. And when you tell people that, they're always like, oh, no way, that's so many. It's really not. I was a professional athlete as well. I understand discipline and what's called stacking. So the goal was that's one book per week. So I would read the book, dissect the element I thought was most important, and try and learn a skill. And every week we would practice one skill. And if you practice a skill every week, you can stack and get incrementally better. And professional athletes do it all the time. It might be how you hold your elbow. It might be how high your knee is. It might be your breathing. Like, you've got to learn something. I posted in the chat, experience is the best teacher. It's also the slowest.
Exactly.
There's so many resources now, coaches, online videos, YouTube. Go everywhere and read to get better. I posted a life hack in the chat room. I can't read books the way I used to anymore, but I took courses on speed reading. Again, I wanted to learn how to consume more information. But one of my life hacks is Blinkist.
Oh, it's lovely. I
Yeah,
love it.
It's an app and you pick what you're interested in, and every day it sends you a free book.
Yes.
And the book's on your phone and it's 8 or 9 pages. And you can read it. I can read them in about 3 minutes now. So you can consume so much information. Whether you can afford to go back to school or trade shows, it doesn't matter. There's so much you can learn because the tools are there for you. So pick something and get passionate about it and just learn how to get better.
And being passionate about being a long life learner, right? That you just don't, you get your diploma and you say, I'm done with school. Should never be the approach. I think every one of us sitting here in this panel, myself included, always looking to see what skill am I going to learn next year? What books am I going to be going after? What else can I learn? So I think if anything for our audience, I think you find that in common from all of us, right? In terms of always searching for additional information. And I think even if you think it's not going to help you, eventually you put the connection, you kind of follow the dots and put the dots together of all this information that you've collected. And it actually helps you become a more thoughtful decision maker. Would you agree?
Well, go ahead, Levon. You raised your hand. I'll let you go.
I just wanted to piggyback off of what you said, which is experience is the best teacher. I'm 100% agreeing. And so one of the things that I got out of college was I kind of thought I knew what I wanted to do. I wanted to be a dermatologist my whole life. So I went and looked up the best dermatologist in my area. I asked her, could I come to her office? And like, what was her day like? Made me realize I hated that job and I didn't want to do it. Very important to do earlier in your life as possible, because we all go down paths thinking you want to do something, but you've never experienced it to know if it's really something you want to do on a day-to-day basis. And so my life hack for everything is when I want to learn something new, I try to find someone who's doing it at a very high level and reach out to them. And even if they don't respond, we are now in the age where everybody's sharing anything anyway. So I follow them on LinkedIn, Twitter, and every single place they're going to be at, and read their books and, get immersed.
And most nowadays, well, at least with COVID, a lot of the conferences that you couldn't attend or they were so expensive, they're actually being offered virtually for free. In many instances, you just have to be open-minded and willing to learn. I do have a question from our audience that says, what budgeting?
Dr. Falcon, I apologize. Can I finish what Levon was saying with this graphic? And then I'd love to move to questions. So again, thousands of hours, hundreds of books. I developed this system and you'll be able to see it. All my information's online free. I don't sell, I just transfer knowledge. But getting the point of what Levon was saying, this is a system I developed that's very duplicatable. It says, what's the emotional value of what you do? Like, figure out what you want to do. Levon wanted to be a dermatologist and there's something cool. Then she researched, right? So like, here's what I want to do. Here's the industry. What's the company that's the best in the industry? What's the title of the person in that company? People come to me all the time. I want to work at Disney. I'm like, where? There's 87,000 employees. Go find the title, then find the name of the best person in the best company in the best industry, and then go find that person. Like Levon did it probably without knowing there's a process. I've created a process. Pick an industry, pick the top company, find the title of the person, and find the name, and then go get that person by name. And be proactive to go after them.
Right, go follow them on Instagram, see what they're posting, see what they're reading.
See who knows them and can introduce you to them and offer to take them to lunch and learn.
Absolutely, absolutely.
All right,
great
so
advice.
the question, sorry.
Great disciplined approach. Well, here's the question from one of our audience. It says, what budgeting advice would you give students that don't get paid regularly? In other words, not like income coming in outside, I guess, from parents putting money into their account.
So for untraditional income, I am very much a person that understands, because when you're an athlete, you get paid a big amount one time and then you're just like, good luck. You got to budget it for the rest of the year. So what I do is I literally think, what is the least you could possibly spend of this money in a certain amount of time, and work backwards and say, all right, let's say you get $100 every few weeks. I would be focused on trying to keep that $100 until you get paid again. I know that's probably going to hurt and it sucks and it doesn't sound like great advice, but you may spend some, but you'll have way more than if you just lived.
Interesting. Stephen.
I don't know a specific way to answer that because my whole life has been entrepreneurial bust and boom. So whenever I have money coming in, there's a certain, not even a threshold, there's a certain budget or a certain, monthly income or expenses. Whenever I have more, I'm always putting it aside. Kind of what Levon said. I'll set aside when I have more. I'll be disciplined enough to save enough for 6, 7, 8, 9 months if I need it. And now I actually have cash and credit and all kinds of. People give you money when you don't need money. People give you more credit when you don't need. I have more loan applications now for free money than I know what to do with. But back when I needed it, they don't give it to you. So just learning how to discipline and save your funds is important. And then again, whatever that fallback is, I'm not a big proponent of credit cards if you don't use them properly, but having that where it's like an accordion. If you have some expenses, but when they come in and your funds come in, pay them off. Have that discipline to use it wisely, and you'll be okay.
Very good. Excellent. Well, here's another question. It says, regarding credit scores, what other ways can you build your credit? So if you didn't need a lot of credit cards, what else can you do to improve your credit score?
So now Experian has these like add-on tools. So you can get an Experian account for free, and their add-on tools will give you credit for paying your normal bills. So let's say you have cable, a phone bill, and internet, right? So those go to 3 different companies. You're going to see it on your bank statements, and they're going to give you credit for that. And it's called like a point boost, I think. And I think that's the easiest way to do it without doing anything extra.
And that's a very important point you just made, because this is fairly new, I guess, in the last 5 years or so. This Experian has opened up this opportunity for people. So you don't have to go get a credit card. This is another life hack that's very important.
And there's another website. I have to think about it for a second, but there's a website that allows you to get credit for paying your rent. So if you are renting and you have a landlord and you show that you're paying your rent, it will incorporate that into your credit score as well. I'm going to think about it for a second, and I'll put it in the chat when I figure it out.
There's all kinds of fun ways. One is Plastiq, Plastiqua. Plastiq lets you pay your rent with a credit card. So then your credit card balance is going up, but you're paying your credit card balance down. So you're showing usage and utilization on your card, but you're earning points by paying your rent. So again, there's all kinds of cool new tools that are coming out that you can investigate, but all of them take discipline.
That's the common among all of the things that you've talked about today, is that discipline and that desire to know and want to do better in terms of your finances. One other question here that says, what is the best advice you could give to students that don't learn about budgeting and financing in school?
Go learn about it now.
Create a sense of urgency to learn it.
I had to teach my dad dollar cost averaging over Christmas because he panicked his 401k was down. And I'm like, you didn't lose money. It's just down on paper. And when it came back up, he's like, oh, it's back up. Now I'm up. I'm like, just if you don't know it, just start today. Go on, just start. There is no time frame on learning.
Because it's 2021, I don't I don't really think that not having the classes or the knowledge is a valuable thing to say. You can
An
literally
excuse.
ask Siri, ask Google, ask YouTube a question, and it will find you the answer to things. So if you want to learn more about different budgeting strategy, go to YouTube. There's going to be 5,000 people trying to tell you different strategy. And what you'll learn over time is that there's 1,000 ways to skin a cat, and you'll find the way that works best for you.
Mhm. And not one answer in your 20s is the same answer that you give yourself in your 30s. Like the same strategy should not be applied every decade. It should change over time because your situation changes over time. Now we're almost close to our time. We have a minute left, and I wanted to ask both of you to see if you have the parting thought of wisdom that you'd like to give our audience.
Mine's the same thing we've always said. Pick a dollar amount, invest every month, regardless of what the market's doing. If you can do more, do more. But even if you start with $25 or $50, and if you don't have 25 or 50, then figure out how to, I don't want to say work harder. That's not being pejorative, but just pick an amount, get started, and be disciplined to do it over time.
Very good. Thank you, Stephen. Lavon?
My last piece would be to give yourself grace. So if you don't meet your budget goals for a month, it's okay. Start again next month. If you don't meet your investment goal, it's okay. Start again next month. Everything you do is a muscle. You're going to grow. You're going to get better. You're going to get more disciplined over time. And it's much worse to beat yourself up about it than to just start over. It's a new Monday. It's a new week. It's a new year.
That's an excellent advice, especially whenever you are really good at it and then all of a sudden something major happens and you don't have the money to put away in your investments or your savings account. And then all of a sudden you say, oh, forget it. Sort of like me on a diet, right? Like I eat a cookie and I'm like, oh God, there goes like 6 months worth of, and then I'm like, oh no, tomorrow's another day and I'm not going to eat that cookie, right? So I think it's important for us to give ourselves some grace. And the other thing, personally, as not a panelist, but moderator, what I would say is that don't believe everything that anybody says to you. Go research, go look, like Lavon said, go find like different voices. In those voices, you hear some commonalities, and that's where the truth lies, right? Go find out from true, reliable sources of what you want to do. Because not everybody, my parents didn't know, and they told me some urban truths that were actually detrimental to my financial well-being. So not always do you think that people know these things. So go find those resources. And our panelists were gracious enough to provide us with some of life hacks that are incredible to your growth for your personal finance. So I thank you. A big round of applause. Oh, yes, Lavon.
I wanted to piggyback off of what you said, because just because they love you doesn't mean they give you good advice. Look it up.
Absolutely.
Well,
unequivocally. Nothing to do with love.
So
yeah.
I have one as well, and I'm often accused of not being politically correct, but politically direct. So I won't use all of the French phraseology here, but opinions are like blank holes. Everybody has one, and that's where all the crap comes from. So here's what I mean by that is, even like in Bitcoin, and I'm not a proponent like, oh, everybody should do it. There's a lot of people that were naysayers because they didn't understand it. I didn't understand it in 2012. I thought it was a glorified gift card. When Amazon came out, I started the same time Jeff did a company. People didn't think Amazon would work. There's always going to be people on both sides of an equation. Listen to both sides. Don't get caught in a filter bubble. Don't just listen to one group of people. Do yourself a favor in today's environment. Find research from everywhere, and then figure out what you most believe in, because everybody's going to have a different idea. And I'll leave you with this, and I've got 10 of these. I'm not going to do all. I'm just going to do one. It's like values. Birds of a feather flock together. but opposites attract. So there's always two sets of an equation: research, listen, learn, and then make your own decisions. Everybody has an opinion.
Absolutely. All right, we're actually a little bit past our time. I'm sorry, Garrett. I think we're having so much fun. We could talk all day about these things that we've learned over time and some of the mistakes that we've made. So hopefully this was really helpful for our audience over the next few years, or certainly they can reach out to me. I'm sure that they can potentially reach out to our panelists as well.
Absolutely. Thank you, Dr. Falcon. And thank you, Stephen. Thank you, Levon. This was great having you on and being able to share your expertise, your wisdom, your knowledge with our students. I mean, really so many great things. And if you're leaving here and still wondering about some of these keywords like secured credit card or even financial discipline or dollar cost averaging, now this is going to be on you to continue to learn this, because this is all very surface level things that we're talking about. And we could take multiple days to cover this even further. So just always make sure that you're continuing to learn, investing in yourself, so that way you can really be setting yourself up for financial success. I put a link in the chat. Feel free to click on that and fill out a quick survey for a chance to win a $25 gift card to Born and Bred. And other than that, I believe we are all set. So I hope everyone has a great rest of their week. And if you have any follow-up questions, feel free to reach out to our office and we'll be happy to support you. All right.
Thank you all. Bye-bye.
Take care.
Bye. Thank you.